So Bassett came out and said, oh, for all these years, it was Wall Street winning. Now it's Main Street's turn. I'm like, okay.
That lasted about a week, didn't it?
Yeah, it's like Main Street won for about a week. I mean, come on, man, really.
You can't do one without the other.
I don't think so. I don't think people can understand financial markets properly without understanding the joke behind it.
Yeah. It was a true pleasure last week to chat to the meme trader, parody hedge fund manager, and Shrubstack author himself, Shrub. Shrub uses humour and parody to highlight opportunities and turning points in financial markets, which he brings to life for his followers on his Reminiscences of a Shrub Operator website. We discussed the role of satire in understanding the stranger-than-fiction world that we inhabit, why it only makes sense when you realise that it's all nonsense, and how its fictional characters, Klaus and the Pod Monkeys, can shed light on the investment landscape that we inhabit. Shrub gives his thoughts on the asymmetry of global markets, why he thinks Nvidia must die, and why currency debasement is a feature of the golden age of grift, not a bug. But of course, none of what you're about to hear is any kind of advice, but just for your information and hopefully enjoyment. Please take personal financial advice before investing a penny of your money in these crazy markets. And with that said, please enjoy my conversation with Shrub.
Brought to you by Progressive Equity.
Shrub, this is a great honour. Thank you for joining. What were you before you became a Shrub?
Thanks for having me, Jeremy. Very excited to be doing this. Thanks for a very kind article you wrote back in August that mentioned me, because I know you're a fan of parody, and I was reading your Tom Lehrer and Monty Python references, so that got me really excited.
You hit two buttons for me. I mean, I'm a big Monty Python fan. I'm a big fan of satire. It's a bit of a tradition in our family, hence the Tom Lehrer tribute I wrote. And my main hobby interest is following financial markets. So what better combination?
So you're at the right place. You're at the right place. We have like parody and financial markets. And you know what? The funny thing is, I don't know if I'm funnier than reality now or reality is funnier than me. I think this time around, we'll talk about it later, but I think right now, reality is funnier than anything I can come up with.
Well, but that was the tragedy of Tom Lehrer, because he quit. Yeah. I mean, he only died this year, but he's been retired from satire since 1971. Most people never heard of him, but he retired because he said after Henry Kissinger was awarded the Nobel Peace Prize, which is obviously something that the Donald wants, has got his eye on, he said parody and satire would no longer had a role in life. Yeah. Which is a great tragedy, of course.
Yeah, absolutely. I mean, it's tempting to call it quits, but, I feel like I have a moral duty to just keep going and calling out the nonsense since no one else is left doing it. So that's what I'm here for. So look, before I transformed into a Shrub, I used to be a hedge fund manager for 20 years. So I used to work with, one of the guys from The Big Short, started my career in London, actually. Before that, I was a banker of all things. I was an M&A banker initially, and then I started working for one of the guys from The Big Short. 20 years as a hedge fund portfolio manager. I run a big family office as well as a CIO. And I started running my own money a couple of years ago, became lonely, and I started writing as a sort of a therapy session. From there on, I just morphed into this mythical creature. Well, I guess it started from COVID, by the way, because I started like a Twitter account on COVID called Shrub, which was actually inspired by Monty Python, because, I was thinking, a shrubbery makes a good hedge, and I'm a hedge fund manager, so I'll call myself Shrubbery Capital. And then actually, quite funnily, I responded to a tweet of Cathy Wood, and I got a reply on my tweet from Elon Musk saying, "Trust the Shrub." So I was like, oh, well, okay. So Shrubbery Capital became like Shrub, but I was like, well, I wanted to be a bit more European because, we're
Eurotrash. Yeah.
So I'd be Eurotrash. So I was like, Le Shrub. So I became Le Shrub. And here we are. I use parody and I use memes when I trade. It just makes it fun, but it's also like extremely profitable because, I have this saying that goes, once you realize it's all nonsense, it starts to make sense. And
such a great framework.
And to be honest, I mean, it's helped me to make a lot of money by just, once you just see the nonsense and you realize it's all a joke, really, I use parody to trade.
So just going a bit further back than that, what inspired your interest in markets and investing? What did you study?
I started Oxford. I started engineering, economics, and management, of all things. So I was a very structured person in a way. My studies were structured in engineering. And I grew up in Cyprus, so we didn't really have a capital market at that point. So the thing that inspired me was actually the books of Peter Lynch. Okay. So I came across the one up on Wall Street when I was a kid. I read that. I understood half of it, but I found it very inspiring. So I actually started off with that. And then the whole 2000 mania was also an inspiration because we had a pretty big bubble, which didn't start in 2000. It started way before that.
Yeah.
So, just seeing those stocks go up multiples, that's what got me to start reading.
Was it Monty Python that got you into the idea of parody?
Yes. So when I was a kid growing up in Cyprus, we only had like one TV channel. We were a British colony and we have a very close link to the UK. So the shows that we used to have were British and very British. So they would be like Fawlty Towers, Yes, Prime Minister, the classics and Monty Python. So they were like the classic shows. And that's what I grew up, or Blackadder. I would watch the classic ones, or Benny Hill, which, Benny Hill nowadays would be canceled, right?
Sure.
So we used to have Benny Hill on it whenever it was on it. It was like everyone would watch Benny Hill. So we had on one side the UK humor, the British humor, which is like very smart and witty. And then on the other side, I discovered a Mad magazine when I was a kid. And, growing up in Cyprus was very difficult to find Mad magazine. Yeah. It was really tough to find. So my dad would drive me like every month to this one newsagent that sold it. And it would be my pocket money. I would buy a Mad magazine.
Hopefully I can remember it. But I think it was a British journalist who'd lived, can't remember his name, who'd lived in Washington for a while. And he wrote a book about the differences between the UK and the US. And he said, the thing about Americans is that they think life is serious and hopeful. Whereas Brits, and I think it's Europeans generally, think that life is pretty hopeless, but not that serious.
I love that. And that's why I think...
And I think it nails it, doesn't it?
Yeah, absolutely, yeah.
The Americans, they don't automatically get irony. That has to be explained to them very often.
Oh, yeah, absolutely. I think it's not just the Americans. My wife comes from Eastern Europe, from Ukraine, actually. So sarcasm is not a feature of Eastern Europe. So it took a while for her to understand and appreciate sarcasm. And the Brits are very good at that.
Satire and parody, to be really effective, has to have that kernel of truth, doesn't it?
Oh, yeah, for sure. It's the classic story of
the slapstick stuff is fine, but unless it's, the Tom Lehrer stuff and the best Monty Python stuff, it had a real kernel of truth to it.
100%. So the way I see it is, how the kings had a jester because only the jester would tell the truth. So in a way, trading now, it's, the big banks have dominated research for so long, and their research became so stupid in a way. Like, it's so biased. You kind of need some independent voices to just call out certain things.
Yeah.
That can be said by people that, if you dress it up as humor, like, for example, so what's happening now with AI, it's a complete joke. There's a lot of circular deals taking place now in AI, whereby NVIDIA puts 100 billion in OpenAI and OpenAI puts 100 billion in AMD, and everyone cheers around this. So you need a Shrub to come out and just say, this is a joke, guys.
Yeah.
Because every major bank is coming out and saying that is a great deal and it's wonderful for everyone. It's like, no, guys, you're just creating a circularity. We're not saying it's a bubble that's going to blow up tomorrow, but, it's just a very, very dangerous thing. And, we can just highlight these things with humor and joke around it.
You mentioned the AI boom or bubble. I guess the question is, how are you playing this? I know you wrote a piece earlier in the year called NVIDIA Must Die. It looked like you were absolutely spot on, but it's like one of those nights that you're all too familiar with from your shrubbery that just sort of keeps going, doesn't it?
Yeah, absolutely. So look, there's a guy smarter than me and way more knowledgeable than me called Jeff Bezos.
Oh, yeah.
And he came out a few days ago and he said, this is a bubble, but don't worry, guys.
It's a good
bubble.
Okay, what is a good bubble?
So has
there ever been any time in history where we've seen an asset boom equivalent to what we're seeing right now, that hasn't ended badly.
Well, that's the thing. Like, there is no such thing as a good bubble because someone gets hurt along the way. So you can argue, you know what?
The Jeff will be okay, won't he?
He's going to be fine, whatever happens, right? And there's actually a very smart reason why he said it is because he's not the one going all in AI capex. It's the other guys. Don't forget that Bezos lost 99% of his net worth in 2000, but he came out on top of everyone else.
Sure.
So he's actually
been there before.
He's been there before. So he knows these guys are going to overspend and just burn themselves. He knows it. So he's just saying, you know what? You guys spend, make the railways, and I'll come and pick up the pieces in a few years. Because I think that's what he's thinking of. Because the railway bubble, for example, of course, it was beneficial for consumers 10 years down the line. But while it blew up, a lot of people lost a lot of money, right?
Absolutely.
Because it was a big part of the stock market.
Yeah.
So the same thing is going to happen here if it blows up, because we're not sure if it will blow up. But if it blows up, a lot of people will lose a big part of their wealth because, don't forget, NVIDIA is like 7-8% of the index in some cases of certain indices. So, put the Max 7 together, they're like half the NASDAQ at this point. So you can't say it's a good bubble because if it blows up, a lot of people will get hurt. So, you just always have to think about the incentives of the person who said it.
Okay, here's a bit of stock market trivia for you. Enron, when it collapsed in 2001, fell out of the S&P 500. Which stock replaced it?
As a market historian myself, I can say that it's NVIDIA.
Absolutely, yeah. That is just such a delicious piece of irony, isn't it?
It's amazing, isn't it? But this is the thing, like, I couldn't come up with that. I try to be funny. Like, I try to find jokes. I could not come up with that one.
Yeah.
And it's reality. I mean, can you believe of all stocks, it's this one? And what was NVIDIA doing and Enron doing? They love these round-tripping deals and these SPVs and these side deals. I mean, it's just that Jensen is more legit. He has a real product. It's a real company. It's a great company.
Of course. Amazing company. I mean, it's just, they all are.
But, the thing with NVIDIA must die, just to step back on that. So my point about NVIDIA must die was that NVIDIA became such a big liquidity vortex that it was just sucking up all the liquidity in the market. So you have like $50 billion worth of trading in NVIDIA every day. And if you think about the Russell, it's only $6 billion. That's why NVIDIA must die, because you want that liquidity to go to the rest of the economy.
The way you summarize things is clearly based on being able to hold together this just huge, complex system that is our global financial markets and its imbalances and its flows. And the scale of the imbalance towards NVIDIA, the Mag 7, the whole US stock market by result, where I'm from, the UK small cap space is just a pimple on the bottom of the financial markets these days. When NVIDIA does die, and entropy tells you it will eventually, you'll be right, everything must die eventually, that capital, assuming we still have a global financial system, it's got to go somewhere.
Absolutely.
If it ends up in UK small cap, well, it's just going to get washed away.
Yeah.
We can't cope with it.
Yeah. There's like a small excitement now in critical metals, for example.
Yeah.
And AIM has quite a few companies in the mining space.
Yeah.
I own a couple of them. Try and buy a few of these things. They trade, $1 million a day at best. NVIDIA trades $50 billion a day.
I know. Just that one day's trade in NVIDIA, the value of that would be a FTSE 100 company.
Yeah. I don't know.
It'd be one of the bigger FTSE 100 companies.
Yeah. I mean, how much does a FTSE trade every day? It must trade like a few billion.
Yeah.
Probably.
Yeah. It's crazy.
So a fraction of NVIDIA. So basically, this is the thing. Like, that's why NVIDIA must die for the good of the world. Like, you need that flow to come back. And that's why the structure, I mean, it's a very long discussion to start, but the UK market structure has changed for the worse. And there's a big problem. Like, you want to attract that liquidity to make it easy for people to invest. You don't want to have, so many, even big caps in the UK are illiquid nowadays. There is no options market in the UK. So these things, no one addresses them, unfortunately. This is something that's been in decline in the UK for a while, which makes it more difficult on one hand to trade. But on the other hand, you do have some insane value opportunities once in a while, right?
And
that's why you're digging into it, right?
Yeah. I'm involved in a little investment trust that invests in the UK nano cap space. It's a tiny fund. It's less than 50 million, the fund. But it's investing in companies with market caps between 20 and 100 million. And it's only got 15 holdings. And it's like shooting fish in a barrel because there's so much value. The UK is economically a challenged place. It doesn't mean all the companies listed in that space are challenged themselves. A lot of them are rising to the challenge, but you've got to know what you're doing because once you're in, they're lobster pots. Once you're in, you can't get out. But no one else is looking at them. Everyone else has given up.
So what you've described now is very important because I love digging into these things. Like I never discussed the liquid stuff that I own, but I own a few of them. What I love about that is this is old school investing where you actually have to read the balance sheet, read the financial statements, speak to management. And if you don't speak to management, you're screwed because
you can only know what's going on. Yeah, absolutely.
Yeah. You know what I mean? Like you've been doing this long enough to know that management, especially with the smaller cups, it's, I don't know, maybe the number one factor in reality. This is becoming a lost art in the new investors, especially in the US. Like in the US, they just look at the chart.
Yes.
Like literally, they will just look at the chart. They don't know what's underlying. They don't care about that valuation.
With 50 billion trades a day, you can always get out, right?
Exactly. You can get out. So you have the comfort and you can afford to be lazy. Whereas, in your style of investing, you have to be cerebral. You can't be lazy and you have to pay attention to so many dimensions, including valuation, opportunity set, management. But that's why there's some real gems in the UK. I mean, just speaking to some companies there sometimes, I'm just amazed because the UK with all its problems, like I lived for almost 15 years there, it has an incredible knowledge base and it has ties to the US. It has access to US capital markets if they want. I mean, there's big funds there. So even if they're being suicidal at times, like lately, the last few years, the UK has been suicidal, let's be honest about it. There's still incredible companies and opportunities. It's not a coincidence that the best companies out of Europe or come out of the UK and also get bought by US peers.
Yeah. I mean,
but unfortunately too soon sometimes. That's a real problem.
One of the principal drivers of the UK small and mid-cap space in recent years is they're being picked off by mainly US trade and financial buyers.
I think that's a real problem generally with startups in the UK and Europe. They just sell too early because we don't have that winning mentality. We can create unicorns. So, for example, I had this friend at uni. He sold his project to one of the Max 7, his PhD. He sold it from the PhD level. I mean, he ended up doing extremely well because he joined. But, I was thinking, even though he's wildly successful out of it, if he was in the US, he would have taken that company and not sold it for 5 million. He would have just gone to the VCs, got seed money, grew it to like $1 billion. He could have been like the next Zuckerberg for all I know.
Yeah.
He didn't even think about it. Whereas in the US, they wouldn't think about selling first. They would just build it to a unicorn. Whereas in the UK, they're like, okay, I made a few bucks. I'm going to sell out.
Yeah.
It is a real problem. And that's why we can't have nice things here.
So let's take it back up to the sort of macro level. Can you introduce us to Klaus and to the pod monkeys and how that helps you think about what's going on in the world and how perhaps we can use those characters to help us understand what's going on in the world?
Oh, yeah. Thank you very much. That's my two favorite characters. So I like to introduce characters in the Shrubverse. If you call it the multiverse, let's call it the Shrubverse, because once you visualize the market participants, first of all, it makes it more fun. So for someone who's like me, bored in his office trading, like you just think of pod monkeys and clouds, it just makes it way more fun. So let's just frame the scene. So the pod monkeys are hedge fund managers who sit in the big multi-manager funds. So for example, the Millennium, Point72, Balyasny, the big hedge funds that are more like hedge fund supermarkets, they don't have just one trader. Each one might have like a few hundred traders. And each one of them, we affectionately call them a pod monkey. They each run like a couple $100 million or $1 billion out of the total pool. And they face severe constraints of risk management. The strength of these companies at the high level is that they risk manage all the pod monkeys together, each pod monkey. So the output is a risk managed product.
Yeah.
One has to understand the dynamics of how these pod monkeys trade. And, they trade with tight stop losses. They trade to make a quick buck. Every month they struggle to make the numbers. And they don't dictate the direction of the market, but they create the volatility around the market sometimes. So on a monthly basis, they will take certain like short-term moves, but they don't dictate the direction. So the hedge fund industry is only a few trillion. It's a big industry, but it becomes big because there's a lot of leverage added on top. But, the actual capital is a couple of trillion. So let's introduce Klaus. So Klaus is your typical European pension manager. Klaus is more laid back than a pod monkey. So the pod monkey is trading all day. Klaus is laid back. He gets a nice salary. He trades out of Zurich or Geneva or Monaco or London. And he runs like, not a billion, he runs like 100 billion. And he is in charge of some European pension fund or even large family office. So the thing with Klaus is that he's very slow moving, but he's a bit like a tanker. And like the pod monkeys are like hovercrafts, Klaus is more like the Titanic. Once he turns, and he dictates the direction of the market. So one very important thing that we called out, thankfully, at the beginning of the year was we figured out that Klaus was not hedged on the euro. So when the euro was at 103, you remember there was like, and this is where parity comes in, when Zelensky came to meet Trump and he didn't give thanks and he got...
But it made great TV. Donald
Trump. It made great TV, but he didn't, he forgot to say thank you. So, But that moment was like what I call a meme moment. Like it's a very important milestone in the morning. Absolutely. Like it's a meme moment because, people remember that moment and it becomes a meme. But imagine you being Klaus, you're sitting in Germany and you watch that and you're like, oh dear. Holy crap. Like Trump is no longer our ally. He's just leaving us now. He's no longer our defense ally in Ukraine. You panic and you're like, what do I do now? Like I've been investing in the US every year since 2010 and 75% of my assets are in US stocks because that's the weighting of the world index.
And why hedge?
Market cap. Yeah, 75% is US. So it's like, why hedge, right? Because the dollar always stays strong. And, Trump told me a year ago, or, Besant told me that the dollar is going to be strong or whatever.
Yeah, dollar policy was a bit of a surfball, wasn't it?
Yeah. So I saw that moment with Zelensky and I was like, you know what? Everyone is unhedged on the euro. People are going to panic. So the euro was 103. And that's when we came up with Klaus and the pod monkey, because it kind of helped to frame it.
Absolutely.
And I was like, oh my God. So basically you have like these guys are sitting on the hedge fund industry is like 2-3 trillion. Just the European fund industry is like pension funds is like 10 trillion. So these guys were sitting on very unhedged positions on the euro in the tune of trillions. And that helped me just frame it to say, you know what? First of all, I looked at my own portfolio and I was unhedged on the euro. So my portfolio is mostly US. And I was like, oh my God. So here's me as a personal investor, private investor. I'm dollar unhedged. Like 70-80% of my assets are in US dollars. I better go out and hedge my exposure. So that's what I did. Like I went out and I hedged and I bought euros.
I think about the time you're referring to after that momentous day in the White House with Zelensky, everyone started talking about the great rotation out of US assets. And it kind of did happen, but not so much now.
Yeah. So this is a key point I was making at the time. I branded it the end of American exceptionalism, started with that meeting. And my framing was not that America is not going to be exceptional because it's still the biggest superpower, still has the best capital markets and the best companies. And, to be honest, some of Trump's policies are actually helping the exceptionalism. So, for example, reshoring and reindustrialization. So my point of the end of American exceptionalism was that you give a wake-up call to the rest of the world to try and become a little bit more self-sufficient and also just reshore their own assets. So, for example, since that day, the euro is still 10% stronger, or actually more like 12, 13% stronger since that day, because Klaus realized that he needs to hedge his own currency and also bring back some money for his own needs. And what I mean by that, so Merz, Germany's chancellor, he announced after that meeting with Zelensky, he announced a 1 trillion fiscal stimulus package. So that was a response to that meeting.
The mega Klaus, really, isn't he? I mean, he responded in the
yeah. So he's like,
got to take a break off, guys.
He's the boss level Klaus, let's say.
Yeah.
So basically, this is the key part: is that you have these big moves that are responding to the American exceptionalism or to Trump's actions. China's doing it as well. I mean, China's doing pretty well on the back of it. Germany's trying to respond. Japan might have a chance. I mean, look, the Japanese haven't been angry with anything since the Second World War, and they were furious after the tariffs. So the currency, which to me it's the least manipulated market.
Yeah.
So the currency is showing that outcome. Why hasn't it shown in the US, in the US stock market? I think there's a very simple reason. And it goes back to what we discussed earlier about market structure. Say you're Klaus and you're running like 100 billion and you suddenly get an inflow of 10 billion. Where can you put it? Straight out. The only place you can put it straight out is the US. You can put some in China and some in the DAX, but if you really want to allocate money quickly, the US is still the most liquid market for the simple reason that NVIDIA trades 50 billion a day. So you can buy some NVIDIA and that's fine. But you're going to wait longer before you allocate to the European small caps and mid caps. But once you do that, obviously the effect is way more explosive. And that's why we are seeing some explosive moves in the European small cap and mid cap space. What I'm expecting is I think the smaller funds and also private investors will take a bigger part because the pod monkeys have a big restriction in terms of liquidity. So, for example, I discuss often with the friends of mine in industry, the most common reaction I'm going to get if I discuss a European name is it's not liquid enough for us.
Okay.
It's the most typical reaction.
Because the pod monkeys are controlled by the risk management organ grinders.
Correct, yeah. So they will tell you you're only allowed to invest 1 day's liquidity, 1 day's volume.
You've got to get out.
It would be the typical. Yeah, so 1 day's volume in a lot of these stocks is like $1 million. And if you're running like $1 billion, well, it's not worth your time. So I think that's why there is a big opportunity for private investors or smaller funds. Like you said, like a $50 million fund, you have a lot of flexibility to take these positions. And that's where it gets exciting, right? And it gets exciting on the part that sometimes I email a company, they speak to me. Like most of the times, companies, answer the phone when I call them of that small size.
Yeah, of course.
No one else calls them.
Yeah, absolutely. Yeah, we find that, yeah. Trump and Besant kind of changed their tune on a number of things since they've been in office. Pretty early on, they torched this idea of Doge and really going route one on attacking the deficit. And they kind of reverted back to the sort of Biden-Yellen strategy of stimulating things to try and outrun the debt.
I need to give a shout out to Yellen because I consider her to be the world's finest. Yeah, which I affectionately call her the Tamagotchi because she's like a Tamagotchi. Like she has a very simple reaction function,
Yeah.
If inflation is below 3%, just print as much as you want kind of thing. I consider her to be the greatest financial villain of our times. I think Lagarde doesn't know much, whereas I consider maybe it's on my own romantic view of the Shrub first. I just think Yellen is like this nice old granny, but actually she's got a more sinister plan because
she's the clever
Lagarde
villain.
doesn't know anything.
Yeah.
But Yellen, she did this really smart thing to prop up the asset markets into the election, whereby she just shifted the issuance of US debt from coupons, so from like a longer term debt, to bills. And by the way, this is not something she discovered. This is something that emerging markets do. But, as a result, she really stimulated the stock market and the asset prices into the election. For some reason, thinking that it's going to help their re-election campaign.
Yeah.
If you ask me personally, I think her view was, we'll either get the guy reelected or we're going to make our friends really rich.
Yes.
Either way, we win. So I think that's how she was thinking about it. And, as a result, the next government, because I want to give some the benefit of the doubt to Trump and Besant, I think they had a pretty tough starting point. So when they came in, they're like, okay, so Yellen just screwed us. She pumped the markets. She issued so many bills. We have to do something about it. So now we have to address these imbalances. So Besant came out and said, oh, for all these years, it was Wall Street winning. Now it's Main Street's turn. I'm like, okay.
That lasted about a week, didn't it?
Yeah, it's like Main Street won for about a week. I mean, come on, man, really, just like.
But he also said that he was going to term out, the first thing he wanted to do, he was going to be the world's biggest bond salesman, and he was going to term out the debt, and that the only thing that kept him awake at night was the 10-year bond yield.
Yeah, and then he became a Tamagotchi. He just took the easy way out.
Yeah.
He was like, you know what? I'll just keep doing what they're doing. Jeremy, the whole funny thing about this market is that it's an animal farm. So George Orwell really nailed it. This is Animal Farm. They just became what the previous administration was, and they just keep going along with it. Like they have good intentions, like the pigs in the book. They had good intentions, but ultimately they just took the easy way out.
What's the outlook for the dollar?
So I've been very bearish the dollar until now. I think from this point on, I'm going to have a more contrarian take and say that I'm bearish all the fiat currencies.
Yes.
And
We
I
can
think
come
this
and
is
talk
what
about gold in a minute. Yeah.
This is what precious metals are telling. So basically, I've been betting against the dollar all year, and it's played out.
Yeah.
But from this point, you just see the UK. Okay, you have your own problems. You see France. I was just joking that the prime minister lasted 3 weeks, which is less than French emperor's mistress before the French Revolution. And then you see Japan, like they have this lady who got elected who admires Thatcher but wants to print money. So that's kind of like an oxymoron by itself.
Only in Japan.
Only in Japan, yeah. So that's a real Tamagotchi.
Yeah.
So you have these 3 major fiat currencies against the dollar, and you're like, do I really want to sell my dollars and buy those? Not really. So that brings commodities, and that's why gold has been sniffing this out for the whole year. I think gold is overbought, but just step aside from the short-term fluctuations. I think commodities in general will be the real hedge against the currency debasement. Because, I think we live in the golden age of grift.
Yeah.
So I call it gag in short because I mentioned the word too much. But in the golden age of grift, currency debasement is a feature of the regime. It's not a bug, it's a feature, because if all these politicians want to give us nice things, well, they're just going to keep printing. If the economy slows down, they're going to print. If unemployment goes down, they're going to print. They're going to cut rates. So ultimately, it's going to lead to currency debasement. And I think the most important thing as an investor is to find ways to protect against the debasement. Step one is gold, because everyone rushed in to buy gold. But, then people are going to start thinking about other things and just finding other things to diversify into.
You said you thought gold was overbought, and it's, looking at the chart, hard to argue with that. But it's probably still very underowned.
Oh, yeah. The time to own gold is when you want to go out and buy physical bars.
Yeah.
Not just buy the GLD ETF. No. It's when you want to go out and buy physical bars and take it and put it in your vault, not the bank's vault, your vault, or just hide it somewhere in the house or whatever. I did that in 2008. So in 2008, my boss, he basically levered himself 100% to buy gold. And, as a kid that didn't know much, I was like, well, that's a smart trade. I put 30% of my assets in physical gold in 2008, which, worked out very, very well. But you have to think, isn't it kind of the same feeling we've been having now for the last couple of years? I mean, probably since the war in Ukraine in a way.
So how would you compare that feeling when you did that and you saw your boss do that? I mean, it was a good trade, but it only lasted for so long, didn't it? I mean, if you held that trade to now, it'd be fine, but not many people would do that.
Yeah, I'll continue that story now that you say, because I left it halfway. So I bought at 950 in 2008. I sold it at 1500 by maybe a couple of years later, because I felt like, you know what, I did well. And then I saw it run up to 1800 and I felt like a schmuck.
Yeah.
But my boss kept the whole thing. And I was like, oh man, should never sell gold. I shouldn't have sold my gold. But then the whole thing crashed back to 900.
Yeah. And your boss carried on holding it?
Yeah. I think he still owns it.
Still got it today. Yeah.
I think he still has it. So he rode it all the way. And that's the thing. I did it as a trade. Yeah. I made money. I sold it, gave thanks. I mean, look, as a kid, it was like, it made a big difference, especially in 09. Like, you make 50% in a trade in 09.
Wow.
Yeah.
Everyone else has lost 30. Yeah.
Yeah, exactly. So that's the problem of seeing it as anything else except a hedge or a currency debasement hedge. Like, you almost don't want to think about it. So my boss rode it all the way from 1800 to 900, now to 4,000.
Yeah.
But he kept believing it through the way. And this is actually one advantage that the Bitcoin hodlers have. Like, the Bitcoin hodlers, if you tell them it's going to go down 50% in the next 2 months, they're going to be like, I don't care. I'm going to hold it because I know what's coming in the end.
How do you define or identify a meme top?
I think the meme bottoms are usually easier to find.
Yeah.
Because you can just see the policy turn. So, for example, China reached a meme bottom when the policymakers came out to support the system. They banned short selling, they panicked, they introduced liquidity, and that marked the bottom like more than a year ago. Yeah. So that's a meme bottom. There was a meme bottom in bonds in the US in November 2023. That's when I started my blog, which I call Shrub.
Yeah.
Because of that event. Because
just after the trust debacle, wasn't it?
Yeah. And I thought that was the bottom in bonds. That's why I started writing longer form, because that's when Tamagotchi Yellen was born. The yields blew up to 5%, and she came in and she provided support by reducing the issuance of longer term bonds to issue bills. And then Powell helped her out by cutting rates at the same time.
Yeah.
So that was a meme bottom. Now the meme tops are actually more difficult because it's quite difficult to call tops, but you can just see clusters forming, and it could be like something really, really stupid. Like, just trying to think example. So, the S&P hit 6,666. And I was just joking that back in 2009, I was on the trading desk, March 2009.
Yeah.
And the S&P hit 666.
And no one wanted to buy
panicked.
Everyone was a seller.
No one wanted to buy it. Everyone was a seller. Like, I remember the panic on our desk. It's like, okay, this is over.
The world was coming to an end. I mean, you were buying gold, weren't you? I mean,
yeah. So, and now we're 6,666. Everyone is a buyer. So,
but when does a shrub grow up and put roots down and become a tree? You delight and obviously profit from calling these meme tops and meme bottoms and trading, and you're all over everything. Is the evolution to one where you put deeper roots down and take longer-term views and become an investor?
I have positions that I've held for years, and the way I do it is I still do it as an investor. In which way? For example, I have some mining stocks that I bought a few years ago. They doubled, tripled. I'm going to sell half. I'm going to take out my capital, and I'm going to leave the rest. So the rest, that's the trade.
Yeah.
But the capital I take out, so my initial capital I take out, that's going in the shrub pot.
They're the
trimmings. Rest is going to the tree. So basically, I think the key is trimmings. Yeah. So that's a good one, actually. You can let the rest grow because especially like I do a lot of mid caps. So you never know how far these mid caps can go. Like you need to give them time to grow. That's why I like my strategy of, I take out my initial capital because I'm only managing my money. So I don't have more money coming in. So I take out the initial capital and I just let those grow as long as they do things right.
Yeah.
If they do things wrong, I'm out on the same day.
Yeah.
But, especially in medical, like I have a medical device company, it's up 3 times. I took out my initial capital, but, what if it's the next big winner in the space and these companies can go up like 100 times, right? Here's how I think about it. I don't want to look back in 5 years and see a company that I believed in do 100x or 10x and I'm not in there.
You need skin in the game, don't you?
Yeah, I want skin in the game. Yeah, especially the ones I believe in. And like you said,
it changes your whole mindset towards things.
Oh, 100%. Yeah, 100%.
You can say, I like that. It's good. I followed it for a while. But unless you actually have skin in the game, you don't feel it.
Yeah, it's important, I think, especially if it's companies where the management that they're doing the right thing. Even if you think like they're going to stumble on next quarter. I mean, who cares about the next quarter? Let them stumble for a quarter. And that's why I do it when I have a free capital. So when I have the free capital, when I sell my initial capital and I have the rest running, it's much easier to let those things run because you're like, well, you know what? It's a free trade in quotation marks from this point. They've made money for me. I'm going to give them the chance. I'm going to just be part of this, especially if it's a good journey. Like there's some companies like I'm really excited to just be part of the journey for the next few years. It's a very simple mindset, actually. You just think, if it works and I'm not there, how many times am I going to bang my heads on the wall?
Which would make you happier for your children to understand financial markets or understand and enjoy parody and satire?
Isn't it the same thing?
You can't do one without the other.
I don't think so. I don't think people can understand financial markets properly without understanding the joke behind it.
Yeah, it's not taking the world you live in too seriously, I think, has inherent value, doesn't it?
I think so, because, I see people get depressed when they trade, or they get depressed, private traders or even hedge fund managers. And, people, especially when things turn, like there's a lot of sad stories when things turn because, right now everyone's on a sugar rush. But if people actually took it less seriously while understanding that it's money, I mean, it's real. I trade for a living, so I don't like losing money. But they have to take the whole thing lightly. Like, don't become too enamored or too attached. There's more things to life than this.
But it's also, it comes back to that point. I don't know who it's attributable to. You need strong ideas loosely held.
Oh, yeah.
And I think parody and satire, particularly ones that are counter to your thesis, is very valuable.
Yeah, 100%. I think this is why I keep doing what I'm doing. Yeah, I just trade and I write and I make memes because it helps me. I mean, for me, it's like a sort of therapy session. And, at the same time, if I make a few people laugh along the way, so much the better.
Well, you certainly made me laugh a lot along the way. And I had great fun going through your posts and your memes for the last few months and literally laughed out loud on every page. So I think the Shrub Stack is a wonderful piece of work, and I congratulate you for it. And I'm very honoured that you spent the time with us today. So thank you very much, Shrub. It's been a great conversation, and please keep going longer than Tom Lehrer did.
Thank you so much for having me, Jeremy. I had a great time.
Brought to you by Progressive Equity.